Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. As anticipated, resistance at 336 held all of last week. Upon trying to get through that level, the market eventually did break, and now we're seeing a test as of yesterday, close to the 318 mark that we talked about. Historically, we look for corn to potentially bottom at the end of July or early August, and that could very well be happening right now with this recent test that did come in very close to that 318 mark. Today, the markets are pushing up a little bit, but we're well off of the highs, trading in about the middle of the trading range right now. Remains to be seen how well we're going to do this week. But as long as we're able to hold above 318 throughout the course of the week, I think a reasonable low should come in, and what we may end up seeing is corn channel for the next couple weeks. We had our geometric support level of 319 to 319.5 occur yesterday, and as you can see, the market came in, tagged right up against that level, and once again, we see a little bit of an upward movement today, but whether or not this is sustainable remains to be seen. We want to see how the rest of this week pans out. The movement in the December corn contract has been very consistent with our expectations. We talked last week about 347.5 being very good resistance, as well as potentially 329 being support. Both of those areas have held very well this week, and we'll continue to monitor to see how the market continues to move from there. We had our low come in at this July 22nd timeline. The market moved up from there, finally broke below that low, but that support beneath at 329 did come in very well. That level at 329 was not only consistent with our 360-degree mark from the previous chart, but also consistent with our geometric low that came in across this horizontal line. And you can see 329 was the mark that was hit on August 2nd. Two standard deviations away from the point of control lands us at 331.5. 331.5 is just below where the market's currently trading. And so up above that level would be at 382, which is well off of where we are right now. So currently we're looking for key consolidation to occur somewhere in the neighborhood of 329 to 331 or so. The soybean complex is really struggling to find its legs here. After making a reasonable low several days ago, sometime last week, we had one really nice push to the upside, but since that time, after pushing up, the market has really been strong to the downside. In fact, each day that he's come in and tried to make an advance, by the end of the day, he's given that up. Much like what we're seeing today, it was actually in positive territory for a good portion of the day, and now we can see the market is back down towards the lower end of the range. In addition to that, we continue to consolidate inside of our previously projected target zone. Right in the middle of that zone is our 979, 360-degree mark. And until the market's able to break away on either side of this area, we're not going to see very much follow through until then. Now, we've tested the low end of this range, and upon breaking down, if we continue to close below this 979 level throughout the remainder of this week, we're looking at 947 to 948 as a minimum price objective in short order, possibly getting it as low as 917.5. And so we'll continue to look at how the market continues to rotate out of here. But much of what we're seeing right here in this price action is simply a pause or a consolidation in the downward trend for the next leg or the next push. That's probably going to push down to about 917 at a minimum. The low from yesterday tagged right up against one of our geometric angles. We can see that 961.5 was a very good turning point for him. But once again, we're seeing continued weakness continue to occur for this price action in today's movement. And so until the market's really able to turn around, and the narrative right now continues to point to continued weakness, we anticipate that the market will continue to move lower and lower. And even as it makes its advances, or even as it makes pullbacks, we're going to see some selling into that pullback movement. The November contract also has consolidated inside of that target band or that target region that we had shared with you several weeks ago. The market is now trading at the lower end of this band. Breaking below support here tells us that the market probably has a very good shot of reaching 897. And so that's what we're looking for right now for continued weakness in this price action. And it bears mentioning over the next several weeks, we have a potential market timeline of September 8th for a turning point. Depending on how the market reacts when it approaches that timeline, we'll have better visibility at that time. But as we get close to that mark, we can expect a potential change in trend near that September 8th timeline. Here again, we can see the market came in and made a very nice low up against one of our natural geometric levels at 943. Markets bounced up from there, but again, we anticipate we're probably going to see continued selling pressure come in, especially as some panic selling starts to occur as these prices are simply not able to find true stability as of yet. The wheat contract is putting in a very good showing today. As we can see from the previous couple weeks, we had very good support after the market came in and tagged our target level near the 405. The market moved back up, found great resistance up against 436, as we had previously discussed over a couple of our online sessions. We see that 436 holding very well. Market comes back down. Once again, it's retesting that 405 number, and we're seeing a very nice move to the upside today, up about 12 to 13 cents. Now, this strength, as we're seeing, is the market had been oversold, but we're seeing a nice little crossover. So we're probably looking at a potential move to about 425 half, possibly up to 436 again. And if it's able to get up above 436, we could see a nice little movement to the upside. But 436 is probably that line in the sand that we want to look for to see if he can have some true follow through here. Otherwise, we're looking at a continued consolidation possibly, since the market has been down so strong. And upon reaching very good resistance, we can potentially see another leg back down again for the wheat contract. 2 standard deviations below the point of control is at 399.25. Lo and behold, that was our exact low from yesterday. Market comes in, touches 2 standard deviations below a very important level. As we've talked about the point of control in the past, market comes in and now we see a very nice and very strong reaction up from there. Up from there, we're looking at resistance above at 454, but again, it needs to get past that 436 number first before 454 would really come into play. In closing, we really like what we're seeing with the December crude oil contract. We've talked quite a bit about this movement. Upon breaking through 47.62, the market finally came in and we saw a nice downdraft. We're looking at a possible price objective of around 40 to 41. Yesterday, the market actually did come in close to that. And in fact, today's low came in very close to that 41 number as well. And we're looking for this low to come in here. Yet, in addition to this movement to the downside, we're also looking at cyclical patterns that suggest that late this week, that crude oil may be putting in a good low. So whether or not we hit our price objective, the timeline is in and we're close enough to that price objective that we're looking for the market to actually turn up from here for about 6 to 7 trading days at a minimum. Another piece of information that's been helpful to help us understand the nature of why we might be bouncing today, if you take a look at the initial impulse move and this downdraft here, and you take the measurement of the distance traveled for this leg, we multiply that by 2 and then take that same measurement after we've multiplied it by 2 and extend it down, we have this 200% mark here. That pinpoints for us literally the exact low that we saw today before the market turned back up and has rocketed to the upside again. You multiply that same length we just discussed by 1.618, which is a well-known Fibonacci factor used in the markets. If this market's able to get back up and close above 43.62 after this movement that we've seen, we have greater confidence that this low is substantial and this market is looking to make a move up that would test about 46.75 at a minimum. So it's important to take a look at what's happening over these next couple days. And in addition to that, one more piece of analyses that we've done is we've been able to go back and look at similar contracts that have traded in a similar fashion to this particular contract here. Here, what we've done is we've pinpointed some critical turning point dates in the existing December crude oil contract. You'll notice that we have January 20th, March 22nd, June 9th, July 13th, and now we're looking at a potential inversion occurring near August 5th or so. We've taken this exact same overlay and matched it up against another contract to do some cycle work. Let's see what the results pan out. Tell me if any of these dates sound familiar to you. January 20th, April 21, March 23rd, June 11th, July 13th, and now we're coming up against the August 5th date. This all occurred in 2009 against the exact same contract for that current year. Now let's take a look at them side by side. Many of these turning points occurred within a day of one another outside of the year's separation. As we look at the markets in this fashion, we're able to use the information from the past to give us insight and vision as to what may occur into the future. Now, these don't hold forever, obviously, but when we're able to find a cyclical match, it helps gives us an edge in being able to identify potential future turns and what we're looking for with regard to price action movement. Of note here, we'll see an inversion occurred around July 13th. This inversion happens sometimes when the markets flip and they start to separate, but the turn points continue to be the same. Part of why we're able to consider this an inversion is because the nature of the pattern that we see in the price action continues to be similar at that time and point, just simply flipped over. Thank you so much for joining us today for our weekly market update. Look forward to touching base with you again next week.